Okay, sound check. All right, so this is working. All right, guys. So good morning, or rather, yeah, good morning, because good morning, folks. We are about 30 minutes away from the open of the London market. It's Monday once more, but it looks like we've got an interesting day ahead of us. Let me just make sure that all of our charts are in the dailies before we get started. We have some very exciting patterns to look into. All right, guys, so before we get going, let me take a quick look at the calendar. What is there for us to watch out for? All right, so um, if you look at the calendar, basically it's a clean day. We don't have much to watch out for the global markets, which means that we are likely to see prices remain within their consolidation within recent ranges. We are not likely to see big breakouts without a catalyst. If you again if you go back to your supply and demand curves, the only way for prices to really move a lot is for some form of external variable to come in, forcing market players to adjust their expectations, to adjust their valuations of prices. So, having said that, let's move to our charts and let's start with our euro. And what do we have in euro, guys? We previously spoke about having a head and shoulder in the daily charts. That head and shoulder was triggered Thursday. We tried to pull back. And let me just open our pen here. Just open Epic Pen, folks. So we were talking before about euro, and we were saying that euro had this head and shoulder, had a breakout Thursday. We pulled back inside a breakout, and that's normal, that happens. And by Friday, we pulled back inside that head and shoulder pattern by Friday, but we have this follow through drop right now. Or rather, we opened with a downside gap in our euro today. All right, so what should we be looking out for, or what should we be doing given a chart like this? Well, first things first, since we have an ongoing pullback, it would be a good idea for us to see what kind of retracements we should be expecting. This is the latest upswing for your euro. Of course, this is the big move since the start of the year. But let's focus on the latest upswing. And what do we have for this upswing? We've earlier we previously bounced off 30.2 fib, but now we've pushed below it. If we look at our chart, it seems that we have these highs right over here. This is from early April. We have some highs here, which roughly corresponds with 50 fib retracement at 1156. So to me, that would be a reference point. That would be our immediate objective for bears. If you look at your Fibonacci's, then you should be thinking in terms of 1.1068. Of course, if you look at your price chart, you should be thinking about this level here. That was a resistance that was tested twice. So I would say that was a good resistance area from before. Should be a good target, or should be a really strong support, a place where we'd expect to find some buyers from. All right, so our downside targets are 50 fib retracement at 1158, 61.8 fib retracement at 1060, and working rate right now is at 1221. So there's a lot of room to go even to get towards that 50 fib area. And um, I guess the issue for us is, will there be catalysts to get there? And when we checked our charts, we saw that, or rather when we checked the calendars, we saw that we don't really have much in terms of an external catalyst to move the market. So what does that mean for me? Nice big picture pullback apparently happening here, but we don't have a catalyst for a huge price action today. Now, if I look at our range for today, high is at 1242, lows is at 1191, so you've had about 50 pips of price action. Now, if we look at the ATRs, what's your usual range for euro on any given day? Well, let me just drag some indicators. One day something. And the ATR tells me that average daily range is just under 100 pips. So I'd say about 98 pips, and we have half of that. But remember, there's no perfect figure when it comes to talking about ranges. That's why we say it's an average, because typically in any price distribution, you always have a curve, and your bell curve will always have this mean, the median, the center, which is where the average is, which means that you could sometimes get prices outside or more than the average daily range, and there are days when you get to see less of that average daily range. And I tend to think that today is one of those days, given the lack of catalyst from the market, given that the calendar is blank. Okay, there's nothing to move it. All right, so lack of catalyst, the average daily range, we have 50 pips of price action. At the very least, can we think in terms of getting towards that 50 fib retracement area? High is at 1242, 50 fib retracement actually gets you just below average daily range. Okay, so that seems to work. Now the question is, do we have the chart pattern intraday that says, yep, I'm gonna get down towards that 50 fib retracement? So what do we have, folks? We actually have okay, looking at our charts, we actually have a pattern of lower highs and lower lows. Even your opening low downside gap earlier is lower than that of Friday. So lower highs, lower lows. Anything in this chart that says you should be jumping short immediately? Well, I guess at this point it really depends on the next 4 minutes, because we do have this consolidation and we seem to be trying to get out of that consolidation. We haven't had momentum in our attempts to do so. So what do I need to see? In the next 4 minutes, I need to see a very bearish close. Okay. I need to see the body of this candle below the low of the previous one, or at the very least, I need to see this candle closing bearish. Otherwise, there's nothing that I would deem as urgently bearish as far as this chart is concerned. Now, what strategies can we use? After all, this is the open of the London market, and we tend to say that during the open of the London market, you get some liquidity going, and with liquidity, you get to see price action. So, one thing that we can do is to consider using sell stops just below the low of this candle. Okay. Now let me just figure out what that number is. So yeah, the previous hourly candle has a low of 1.12138. So I'm thinking, all right, maybe if I get something like 1.1212, or maybe just 1.1213, and I would be considering jumping short. Again, we're not aggressive about our expectations here. If I get to see the lows for the day at 1191, I'd be happy already. Although ideally, our target for any bearish action is to really get towards 50 fib retracement at your 1158 region. So guys, we're just looking for the pattern of lower highs, lower lows to continue. We don't think that there is enough momentum to really push this down. Our immediate objective is to try to get to this level first, lows for the day at 1191, and maybe, just maybe, all the way down here, 50 fib retracement at your 1158 price point. Now, if you do jump short at the break of 1213, again, I would suggest that you do partial profits once you hit the earlier low for the day at 1191, and you adjust your entity, your stop loss, your trail stops, you adjust them to break even, and ultimately let's see if we can get all the way down to 1158. Do we have any reason to expect more? As far as the charts are concerned, it doesn't seem like it. We don't have anything in the chart that says that it's a good idea, or rather, as we don't have anything in the calendar that says that it's a good idea to look for something more bearish. All right, folks, and there we have it. There's the break. So our stop loss for this would be above the day's high. And our target, immediate objective, would be here at the day's low at 1191. Ideally, we should be thinking about all the way down to your 50 fib retracement area, 1158. We do not expect to do more than 1158. Looks like we're actually, all right, looks like we're actually very active, guys. Let me just adjust our trail stop. So pretty active market right now. That's, I guess, that comes with liquidity. One thing that I like about trading days where there's no data is that things are really rather technical, and I tend to think that it's actually safer to trade these kinds of markets rather than situations where you have an external variable which could change your technical outlook. But okay, this is an ongoing market. Let's take a look at something else. We're already short in euro. Let's see what else can we go into. Okay, GBP seems to be following the euro's course. Looks like it has its own head and shoulder breakout. But I guess let's take a look at gold before GBP. See what we have for gold. Now, if I look at gold, what do we see? A very volatile market. Of course, you have to think of this you have to look at the context for gold. We have seen historic levels in gold. And what I find interesting is we have failed to take out the previous historic level in gold. We tried it earlier last week and we failed. And now that gives me a potential double top in our charts, breakout point at around 3200. So guys, anything about gold? I'm actually surprised that we're not seeing new highs, given that there's been a spate of, shall we say, increased tension globally following the what happened between Pakistan and India, and then all of these social media wars that both that India and China is also having. But if I look at the chart, we still have a double top, and current price action is apparently trying to get us all the way down to your trigger point. Okay, now your support, your trigger point is about 3200, and then you have another chart based highs around 3150. But let me draw some Fibonacci's, see what they'll give me. Here's the latest upswing. Looks like we've been to 50-50 retracement. We failed to get a convincing bounce off it, and now we're heading lower. Alright guys, for now, I tend to think that given the kind of sell-off that we've had from Wednesday, Thursday, and now at the open, gold is bearish. At the very least, gold should be testing the 3200 area. You know, that's still quite a bit of points there. Working rate is at 3250, and we're talking 3200, so there is some downside to it. Well, let me see this on the intraday scale. Timing wise, is it still a good idea to chase this? For our candles, looks like I do want to see a 4-hour close first, given that the previous 4-hour candle gave us a dragonfly doji. Technically, that would have been a bullish signal, but we never got to the entry point of it. You know, if this were like just a few minutes ago, I would have been thinking with this dragonfly doji, I would have thought place a buy stop around 30 to 90 and see if we can close the gap. But it doesn't look like it. Now, I'm not going to suggest shorting this at the moment. We do tend to think that at the very least we should be getting to 32.26, and there's some room to maneuver there. However, I don't really like going against your dragonfly doji here. So we will be remaining sidelined as far as gold's concerned. Now, if you bring me towards that 50 fib, 32.26, at that point, I would start asking, okay, we've been here before, can we bounce again off that 50 fib retracement area? And I would start looking for hammers or very long tails in the hourly candles from that 50 fib area before I consider the buy side. or you might want to wait for some form of consolidation before taking the buy side. So yeah, folks, we're bullish at this point, at least intraday. We're getting near the potential entry point, but we don't expect for things to just bounce off immediately. So no immediate trades for us. Perhaps later we'll get the candles that we need to see. We'll get the signals, the trigger that we need to see at the price that we want before going long again. We'll try to cover that gap from the open. Of course, some of the reasons behind this really, I would say, is the some developments over the weekend. We actually had President Putin suggesting that they're ready for talks with Ukraine. Of course, any news about peace would always have a deflating effect as far as the gold prices are concerned. Gold's pretty simple, guys. If there's any violence, there's any war, there's any source of tension, then you expect prices to head back up. All right. Let me just go overview first. See what else looks interesting at this point. Okay, where should we head to next? Yeah, let's see if there's something we can do with GBP. All right, folks. I guess the problem with GBP at this point is that you don't really have a clean break. So just like in Euro, we seem to have this triple top, or maybe you can call it a head and shoulder in our chart. Actually, that's the wrong way of drawing that. It should have been drawn this way. This just this armpit or this low connected with these lows here gives us this breakout. So we've actually had a breakout of that head and shoulder pattern before. So this is actually a classic, guys. Breakout, pull back to the neckline, and a resumption of your breakout. That's a very classic pattern as far as head and shoulders are concerned. Let's show that again. I guess it's better seen from the 4-hour picture. Yeah, here we go. 4-hour charts. And this is what happened before. We had a breakout, pulled back to the neckline, and then rejected from the neckline. Of course, this pattern is on the daily scale, so it's not something that that we are in a position to act on immediately. All right, guys. So um, before you can be confident about shorting this, our problem is proximity to the target at the 32.10. Working rate is 32.51. So there's actually 40 pips to this. Um, Let me just switch time frames here. So again, this is a daily scale head and shoulder breakout. Now, one of the things that you'd like to do is you'd want to measure this, whatever this distance is, you project it at the breakout point, and that would be the target of your breakout. That's about 31.10. So this is not an immediate trade in your GBP, but it's something that you should be thinking in terms of, can I hold it for the next couple of days? Will this drop to that 3100 area? Working rates is about 32.45 right now. Again, if you go intraday, you will see that this was a head and shoulder breakout. There was a pullback to the neckline. Okay, and I guess that means that our trade for euro has been closed already. So don't you just like Mondays? I mean, if there's nothing to move the market, no big deal, no big catalyst to watch out for, things become purely technical. Now, we do not suggest that people who are short-term traders, who are intraday traders, try to catch up on this one. This is an ongoing drop already in our cable charts. By the way, just a little trivia. Why is GBP USD called cable? The reason for this is that back in the day, there used to be this, a physical cable. Well, there still is a physical cable that connects New York to London, and that's where transatlantic trading was conducted before. So the name stuck. That's why we call it cable. So we're already out in our euro chart. So we've hit the target for euro, but we still have that big black candle, big bearish candle. Okay, sorry, I'm used to thinking in terms of white candle bullish and then black candle bearish, because that's how it was before. That's how it was before there were computers, or even with the early computers. Classically, if you have a candle that was unfilled, we call it the white candle, then that's bullish. And then if you have a filled candle, which is now could be any color, as long as as long as it's not the same color as your bullish candles, then they're fine. So we are at 55 retracement area. We're trying to take it out. Do we suggest people catch this? Again, this is a support, and it's called a support for a reason. Okay, prices tend to hold at that level, although we are breaking through it. Still, I think it's a bad idea to chase this, considering that we are seeing average changes. And this is not just a arbitrary number. This is not just a pivot chasement level, but this is also around your previous highs. So for the moment, folks, I would say stay away already and try to gauge market sentiment. Ranges, averages, they they have an impact. They have some meaning for the market. And like we said, absent of a catalyst for a big drop, I don't expect to see much more much more decline in our euro prices. So for now, stay away from this market. But later, if prices hold above that 50 fib area, then later if you start getting hammers or dragonfly dojis coming from this price level, then I would consider going long, but not at the moment, not at this point. All right, so I guess nothing for now as far as new trades are concerned, but if you get those kinds of candles at that support level, which we are now testing, then yeah, you can consider taking the buy side at that point. All right, let me just go overview, see what's happening elsewhere. Now, I normally don't look at crypto, but let's see what's going on with Ether and Bitcoin. Well, Bitcoin's already around 100,000, so let's skip that. Well, let me take a quick look at Bitcoin. I guess the problem that I have here is that you're actually near historic highs for Bitcoin already. So let's skip Bitcoin, let's go Ethereum. Unlike your Bitcoin, which is near its average, which is near its historical highs already, Ethereum seems to have a lot of upside available to it. Okay, what do we have in Ethereum? If you go weeklies, you'll note that you have historic highs in Ethereum just shy of 5,000. Okay. That's shy of 5,000, around 4,900. And the working rate right now is at 25. Sorry. So what I'm trying to say is there's a lot of room to go. There's space. What else do we know about this chart? We have entered a previous consolidation area. It looks to me like the next key resistances here are all the way up here. Sorry. Now let me drag some fibs as well. So that's your downswing. Okay, so looks like your Fibonacci's were just, did not really hold the first time they were tested at 38.2 fib. 50 fib roughly corresponds with this previous consolidation highs. So I'm wondering if we're going to get there anytime soon. So working rate 2569. Of course, this is really big picture. Let me go dailies here. Well, your candlesticks from Friday told you that there was a loss of momentum. You had a high wave spinning top, but current price action is telling you otherwise. Still, you need to top the high from Friday before you can really be confident that this indeed has momentum. If you look at the dailies, you have that consolidation from February between about the 2560 region all the way up here towards the 2900 level. Now the problem with this chart is, again, you don't have a catalyst and you actually have not seen a clear break of the previous highs. So I guess there's nothing that we should be doing right now in this chart. We're getting close to the high from Friday. This is an indecision candle. You need to have a daily close above Friday's high. Friday's high is around 260255. So we need to have a daily close above 2602 before we can be bullish. At that point, we will argue that, okay, you know what? You have re-entered the previous consolidation from January to February, then expect that to happen here again. Ultimately, you have a nice resistance in the Ether, in Ethereum, around 3060. 61.8 fib retracement level. So no immediate action can be done here, guys. Just take note of what's going on. We seem to have turned around and we're not stalling. Okay, so let me get back to overview. So I guess at this point, folks, let's just end our session here. Although we are seeing some really nice drops at this point, we don't expect to go beyond your daily average changes given the absence of a catalyst. So for now, I'd say take what we have, take a break. Okay, don't try to squeeze this. We don't have any reason to expect more than what we are seeing so far. All right, folks, so thank you for joining, and please do join us for the coding session on Wednesday again. What we will do with this Wednesday is we will use Grok to update the EA that we made last Wednesday, improve its trading performance by improving the logic behind its take profit and stop loss parameters. All right, guys, thank you for joining. See you on Wednesday.